Hey Rob, I'm going to answer your question. You had asked about that 37,200 entry, and you got wigged out. Um, when do you just jump back in, put a lower stop loss? Okay, let me walk you through what I would do and why I actually uh, if let me walk you through it. All right, right now I am on. Let me go to the 1 hour. Okay, so this is what you're talking about. You apparently got in here, but you got stopped out here, and that's a really deep stop loss. I mean, let's zoom in on that. Um, when I enter in trades, I like to get confirmation, right? And if you take a look, even if you had gotten in right, you probably got in right around here on these dojis. If you take a look at the pips for that wick, this was 67 pips. That's a lot of pips. See that number at the end, minus 67,348. That's you drop the last three digits, and you're looking at the two pre digits, which are 67. That's really deep for me. But if I was I was on the road when I seen this form, and I didn't get in on the trade because on my phone I was counting pips. And when I was counting it, I said, okay, 67 at 20 for my spread. I'm looking at an 87 pip spread, 87 pip risk. That's how much I'm risking. And then I have to decide, okay, will the reward pay out? I like to get at least three, so 612. So that'd be almost 70 pips, 7, 14, 21. I need this thing to give me 210 pips, where the craziest part is it probably already gave it. Let's add that up. All right, so yeah, there it is. Yep, 279 pips. So yeah, you win some, you lose some. So based on this, I missed it, and I would not have gotten in on it. If you take a look at this here, I got in on this. Let me show you something. I got in here on this play right here, and rode this all the way down, and it stopped me out here because I had a trailing stop loss, and my trailing stop loss was on the BMS of lower high here, and it was right around here. Boom, and then it came up. Price came up, tested this. The reason why I came in, I entered again for a sell, and again that's a counter trade, is because I seen this right here. This you see that right there. This doji meeting up with this order block, and I said, okay, you know what? It's a clean. It's called the liquidity grab. So it was a clean liquidity grab. He just grabbed for stop losses, then brought it down. So I got in on that, and then I actually exited down here once it gave me the equal lows here, but I did not get in up here because again, it's too, for me, the risk was really high. I like to see when the risk is much lower than that. And on a, let me see something here. On a low time frame, right, I could not, like on a 15-minute, I couldn't see, because this is just one giant wick, I couldn't see like an order block here. It's just too long of a wick. So I stayed out of it. However, if I was at home, I would have stayed in on this. I would have entered in on this if I was at home, because my home computer on my other system actually shows that this was what's called ADR, average daily range. This was an ADR. It's actually like this. That was the low, and the high of the daily range was here. And I said to myself, wow, that's interesting. I only seen it when I got home, that once it pinned ADR. Because basically when you see it come from high ADR to low ADR, that's and with a wick, that's a high probability that's going to pay out, because he's especially the wick is indicative of a major stop hunt. So if I was at home, I would have gotten in on this, but it is what it is. You win some, you lose some. So the question is, do you jump back in the answer to that question is, if I was home, I probably would have jumped back in on this red candle, right? So that's the pullback. And on that pullback, I would have waited for a confirmation candle. So it would have been right here. That's where I would have gone in. So yes, I would have gone in. I would have waited for that confirmation candle, which is basically you've got railroad tracks, clean railroad tracks, and that would have given 163 pips. See that 163,707 at the top? That's what it would have paid out. So understand my perspective. When I'm deciding to get in, I need to make sure that the risk reward is balanced out. In this case, the risk is very, very high because I've got 67, 68, and I have to add 20 for my spread. So I'm already at 67, 77, 80, 90 pip spread. That's very high for me. So I would have, if I'm on the road, I would have stayed out of it. If I had more visual tools in front of me, such as if I had known what the average daily range was, I definitely would have gotten in on it. But so, okay, now the question is, where is another entry? The other entry would be after this here, this large engulfing candle, because that's a huge candle. Enter in on the pullback. So what you're going to do is you're going to drop lower time frame. You can even go to the 5-minute time frame. On the 5-minute, this is what it's giving us, right? Boom, boom. These 3 bars here would have been your entry because you need confirmation. You definitely want to make sure you're still going up, but you want to wait for the pullback. So here's your pullback right here, pullback, and because you wait for the 1-hour candle to close. Boom. Once that 1-hour candle closes, drop it to the 5-minute. Watch the candles, wait for the pullback. Here's railroad. You could have gone in here, or for extra warm and fuzzy, you could have waited for the next candle, which is this, which would have given you a 3-bar swing. 2 green candles engulfing this red candle. Boom, there's your entry. And then you had a small pullback, but then 163 pips to the upside. Hope that helps, bro.